Good morning, traders. Christian Kerr, Senior Market Strategist, dailyfx.com. This is my idea of the day for July 30th, 2014. Today we'll be taking a look at the dollar Swiss exchange rate. Just because I think we're starting to get near levels that are going to demand our attention as they could prompt a reversal or at least prompt a stalling of this move higher. As you can see today, we've had a nice expansion, to the upside following the better than expected U.S. GDP data. Came in about 1% higher than expected, which is leading to a broad dollar rally across the board. Later today, we have the FOMC decision, and I think any sort of talk or commentary from the Fed that suggests the extraordinary policy they have in place is going to start coming off could or would be helpful for a dollar rally. Anything that doesn't or suggests we're going to continue on the same path would be considered negative for the dollar. So that's kind of where we're at going into the meeting. In terms of dollar Swiss, why I'm focused on the zone, and it comes into play right around 91.15 to about 91.50, is we have the year's high. So right around January 22nd, we had the closing high of the year, and that was 91.14. So that's usually an initial important resistance zone. We also have an 88.6% retracement right around that level as well. The intraday high of the year is right around 91.55 or thereabouts, and then we have an extension level, Fibonacci extension level, around 91.50 as well. So that whole area from 91.50 to 91.50 will be, I think, an important price zone. Last week, I thought the dollar might sell off or have a correction because we were heading into this resistance zone around 90.60. And we had a turn window. The market blew through that, setting us up for a move into the next turn window, which is next week. So I'm generally positive on the dollar and dollar Swiss until next week. I mean, we could get some more two-way action as we enter this zone, but I think we need to monitor it closely as we get into that 91.15, 91.50 area, because I think that those are long-term levels. People who have been long might look to start getting out, and we could get some counter reaction moves. And with the cyclical picture turning a little more negative on the dollar starting next week, I think we're at kind of that phase. You need to start looking with a little more caution. But obviously today's event could lead to a final thrust. But just keep an eye on these levels going into past NFP, I guess, maybe going in NFP. We're getting negative price action. We could get some decent trade setups. Good luck, profitable trading. Christian Kerr signing off.